Fusion Mobile, quality e-learning experience on the go.
You are welcome to Fusion Mobile e-learning platform. I'm Olokobi Pelumi by name, the accounting tutor. So we will be treating bank reconciliation statements. So the outline, we have the definition of bank statement, definition of bank reconciliation statement, reason for the disagreement between the cash book and the bank statement, preparation of bank reconciliation statement, and preparation of adjusted cash book. And now we have the definition of the bank statement. The bank statement is a statement prepared by the bank and sent to an account holder in order to enable the account holder or its customer to know the balance in its account. So the statement is initially prepared by the bank and sent to its customer either monthly or quarterly based on the agreement between the bank and its customer. So it shows the amount of money in the account of its customer. So the next one, we have the definition of a bank reconciliation statement. The bank reconciliation statement is usually prepared to reconcile the disagreement between the cash book maintained by the customer of the bank and the bank statement prepared by the bank itself. This occurs whereby the statement prepared by the bank when given to the customer will not correspond to the statement maintained by the customer itself, which is the cash book. So whenever that occurs, it means there will be disagreement between the cash book and the bank statement. That calls for reconciliation. So bank reconciliation will have to be prepared. So in order to reconcile the cash book and bank statement. So we have the reasons. So we have the reason for the disagreement between the cash book and bank statement. The reason for the disagreement between the cash book and bank statement. There are a lot of reasons why the balance in the cash book will not be the same as the balance in the bank statement. We have number one, unpresented check. Then two, we have uncredited check. Three, we have dishonored check. Then four, we have bank charges. And the fifth one, we have credit transfer. In the sixth one, we have the dividend. In the seventh one, we have standing order. And we have undercasting and overcasting figure, and also error by the bank can also cause disagreements. So these are the major reasons why the balance of the cash book will not be the same with the balance of the bank statement. So let's take them one after the other. The first one, we have the unpresented check. So you can take them one after the other. The meaning of unpresented check. Unpresented check, as the name signifies, they are the check issued or drawn on behalf of someone and that person refused, or due to some reason to present such a check to the bank. So whenever the check is issued on behalf of someone or is drawn on behalf of someone and due to some certain reason the person failed to issue the check to the bank for payment. So whenever that occurs, immediately the check is being issued to that person, the cash book would have been what? Would have been credited. That means to reduce the amount of money in the bank in the cash book, and nothing would have entered in the bank statement. So when the unpresented check, the cash book would have been credited. So that means reducing the balance in the cash book, whereas the bank statement, nothing will have been entered in the bank statement. So the effect of unpresented check in the bank statement and in the cash book is that the balance is that the balance in the cash book will be lesser than the balance in the bank statement, because once the check has been issued on behalf of that person, the cash book will have been credited, that is reducing the balance in the cash book, whereas nothing has been entered in the bank statement. So the balance of the cash book will be lesser than the cash book. We have a lesser balance. Why this? The bank statement, we have a greater balance. So correction. So whenever the unprecedented check causes a disagreement between the bank statement and the cash book, the only way to correct it is for us to add the unprecedented check to the balance of the cash book, or we deduct unprecedented check from the balance of the bank statement. So we have another reason again for disagreement. We have the uncredited check. Uncredited check. This is the check paid in by an account holder or its customer, or the customer of the organization, or any other persons. So, and this check has been paid into the bank, and the bank refused to credit such check, and that can due to some certain reason, maybe due to latest in the banking clearing system or something like that. So when that occurs, immediately the check has been paid into the bank, the cash book must have been debited to increase the amount of money in the bank, whereas the bank statements not have been updated. So that means uncredited check will cause the cash book to have a greater balance. Uncredited check will cause the cash book to have a greater balance, and the bank statements to have a lesser balance. So uncredited check are always the check which are paid in by an account holder. Maybe such check are issued are received from the customer of the organization. So once that check has been paid into the bank refused to credit such check, and it must have been entered into the debit side of the cash book. So the correction to make to that to uncredited check is for us to deduct uncredited check from the balance of the cash book, and also add it to the balance of the bank statement. So that is the only way we can correct the uncredited check whenever it causes disagreement between the cash book and bank statement. So the next thing we have is dishonored check. Dishonored check. These are checks which the bank refused to honor, and the bank can refuse to honor a check due to some certain reasons. Maybe this check is overstaying, that is, the check has been issued for a long period, that is more than 6 months, or the owner of the account is having insufficient amount. So whenever a bank dishonors a check, immediately the check is being issued and the check is being paid in by the bank, the cash book must have been what? Debited immediately. So what will happen? It means the balance of the cash book will be greater than the what? The balance of the bank statement. So that is similar to the uncredited check. So we have to deduct the dishonored check from the cash book and add it to the bank statement to correct it whenever it causes disagreement between the cash book and bank statement. So we also have the bank charges. So this is the amount of charge or interest collected by the bank for the services it rendered to this customer. So whenever the bank renders services to its customer, interest is usually charged by the bank. So when the bank charges such an interest, the customer might not be notified. So that can also cause disagreement. So immediately the bank charges such an interest, the bank statement of the customer will be debited immediately. That is reducing the amount in the bank statement, whereas the cash book has not been updated. So the only way we can do that is for us to less bank charges from the balance of the cash book, or we add bank charges to the balance of the bank statement. So we have the credit transfer. The credit transfer is usually amounts paid in by the debtors of the firm directly into the account of the firm without its knowledge. It occurs in business whereby the debtors of the firm can pay its debt directly into the accounts of the proprietor or the firm without the knowledge of the firm. So it means when such payment is made directly into the account of the firm, it means the bank statements must have been credited directly without the cash book being updated. So what will happen? The balance of the bank statements will be greater than the balance of the cash book, and the only way it can be corrected is to add credit transfer to the cash book and deduct credit transfer from the bank statement. So we have dividends. Generally, the shareholder of an organization or of a company receive dividends. So it's usually the interest a shareholder receives from the part of the profit of the organization in which is having shares or in which is having interest in. So whenever such an dividend is paid, so such a dividend will be paid directly into the account of the firm without the notification of the firm sometimes. So when such a thing occurs, what will happen? The balance of the bank statement will be greater than the balance of the cash book. So the only way we can reject that is for us to add dividends to the balance of the cash book and deduct dividend from the balance of the bank statement. So we have the standing order. The standing order is just the order given by an account holder or a customer of the bank to make regular payments on its behalf. So whenever this order is given to the bank will make such a payment directly without notification of the firm sometime or the customer of the bank sometime. So whenever that occurs, and such regular payment can be in form of subscription, monthly subscription, or quarterly subscription, or yearly subscription. It can be in form of higher purchase installments and other form of regular payments. So when such a thing occurs in business, so that can also cause disagreement between the cash book and the bank statement, and the only way that can be corrected is to deduct standing order from the cash book, or we add standing order to the bank statement. So if you look at the reasons for the disagreement of the cash book and the bank statement, now it's for us to move to the preparation of the bank reconciliation statement. Preparation of the bank reconciliation statement. So the bank reconciliation statement, so we can start either from the balance of the cash book or we start from the balance of the bank statement. So when starting from the balance of the cash book, we have balance as per cash book. So we have the balance. So we are going to add the TV addition to it, and this TV addition is the unpresented check, which have been explained earlier, will be added to the cash book. We have the credit transfer. Thereafter, we have the dividend. So we have this, and we have this. If we have the amounts, then we have this. And that gives us the addition of this, give us this. So we're going to less uncredited check. We're going to less uncredited check. We're going to less this honor check. We're going to less bank charges. That also we are going to less standing order. So we have this, we have this, we have this, then we have this. That gives us this. So then we less that gives us what we are going to have. The balance as per. We're going to have balance as per bank statement. So we can also start with the balance as per bank statement. So while starting out with the balance as per bank statement, that means we are going to add this and deduct this. So if for instance we have balance as per bank statement in this place, so what we are going to add is going to be uncredited check, dishonored check, bank charges, standing order, then we deduct unpresented check, credit transfer, and dividends. So let's take an illustration. So we have an exercise, an illustration. On 31st March 1990, Omini's cash book showed a debit balance of 2,000 naira. Its bank statement showed a balance of 2,270. On comparison, the following were found. So the following were found as the reason for this agreement. Checks drawn amounting to 1,500 had not been presented for payment. So this is unpresented check. Okay, a standing order. Bank charges say a dividend of 300 was paid directly into the bank and not recorded in the cash book. E. Checks for 1,000 naira were entered in the cash book and paid into the bank but had not been cleared and thus not credited. So uncredited check. A customer Bolaji paid 120 naira directly into the bank without notifying the firm. This is credit transfer. So we can then prepare our bank reconciliation statement. So we have naira. So you can start with balance of as per cash book. As per cash book. In the balance of the cash book, Greenleaf cash book show you a debit balance of 2,000. We have 2,000 naira. So we again add unpresented check. Okay, we have unpresented check. So a check due for 1,500 has not been presented. So add unpresented check. 1,500. So standing order will serve as a deduction. Bank charges deduction. A dividend, again add dividends to it. So dividend of 300. While also we have check for 1,000 we are entered into the cash book and paid directly, but not be cleared and thus not credited. This uncredited check that will serve as deduction. A customer Bolaji paid directly, so that will be credit transfer. So that will be addition. Credit transfer, which is 120 naira. So we can then add that. And that give us 1,920. So we then have 3,920. So we can less standing order. So we have bank charges. Well, also we can deduct uncredited check. So we have standing order to be 600. While we have the bank charges to be 50 naira, and again uncredited check to be 1,000 naira. So the addition of everything give us 1,650. Then we can then deduct, like that give us 3,920 minus 1,650. Then we have 2,270, which is the balance of the bank statement. So balance as per bank statement is 9. So this is the balance of the bank statement, which is what we have here. Okay, well, also we can also start with the balance as per bank statement instead of starting with this balance as per cash book. You can start with the balance as per bank statement. So in this we have balance as per bank statement. So we have 2,270. So we are going to add those deductions to the cash book. What are the deductions? We have the standing order. We are going to add the standing order, which is 600. So we are going to add the bank charges. So the bank charges is 15 naira. So we are going to add uncredited check. Which is 8,000 naira. And that gives us 1,650. So when we add this to this, so 1,000 to 2,270, we then have 3,920. So we can less unpresented check, which is 1,500. You can thereafter less dividend, which is 300. Then we can less credit transfer, which is 120. So the addition of everything gives us 1,920. So when deducted from it, that gives us 2,000, which is the balance as per cash book. So we've done the definition of bank statements, the definition of bank reconciliation, the reason for the disagreement between the cash book and bank statements. Then we prepared the bank reconciliation statements. So the next subtopic is the preparation of adjusted cash book. So the adjusted cash book involves updating the cash book, that is, including those items of disagreement between the cash book and the bank statement which are not been entered in the cash book. Those items of disagreement between the cash book and the bank statement that have been included in the cash book earlier are the unpresented check and uncredited check, while those items of disagreement that are not found in the cash book earlier are the dividends, credit transfer, standing order, dishonour check, and the rest of it. So those items that have not been included in the cash book earlier, then will then be updated. We will use in updating the cash book. So those items include, item of disagreement are the unpresented check. We have the uncredited check. Then we have the dishonour check. So we have the dividends. We then have the credit transfer. We have the standing order. Credit transfer, we have the dividend, dishonour check, uncredited check. Then we have the bank charges. So the unpresented check and uncredited check have been included in the cash book because the unpresented check must have been credited to the cash book, why will not be included in the bank statement. So these two items will no longer appear in the adjusted cash book. So all this directly affect the bank statement, not the cash book. So we use these items in updating the balance of the cash book. So the first thing in adjusting the cash book is for us to have the balance of the cash book, balance brought down if it is the debit balance. Again, have the balance brought down. So the dishonored check. What is the effect of the dishonored check? The dishonored check is having the effect of reducing the balance of the cash books. That means we have to deduct the dishonored check from the balance of the cash book. That is, the dishonored check, there are those checks that the bank refused to honor. So when the bank refused to honor such check, what will happen? The account or the bank statement of the bank statement of the customer will have been debited rather. So what are we going to do to the cash book is for us to reduce the balance of the amount of the dishonored check from the cash book. So the adjusted cash book will be credited with the balance of the dishonored check, with the amount of the dishonored check. So we have dishonored check. You have dash and dash. So this is gone. So the next thing we have the dividend. That's about an addition to the cash book. That means we have to increase the balance of the cash book. So this dividend is the amount of profit, the share of profit for shared held by the owner of the firm. When the owner of the firm is having the shares in the company and the company declared dividend, so the company can pay the amount of the dividend directly into the account of the firm without notifying the firm. So the effect of that is that the bank statement will have been credited without debiting the cash book. So what are we going to do is for us to debit the cash book now, update the cash book with the amount of the dividend. So dividend will be debited in the adjusted cash book. So we have dividend. So the next thing here is the credit transfer, paying an amount of money by debtor directly into the account of the firm without notifying the firm. That is similar to the dividend. So what happened? The bank statement must have a greater balance, must have been credited directly into the account of the customer without the cash book being debited. So what are we going to do for us to debit the cash book with credit transfer? So the next thing, we're going to have standing order. So the order given by the customer. The order given by the customer to the bank to make regular payments on his behalf. So when the bank carry out such order by making such payments, what will happen? The bank must have debited the bank statements without the cash book being credited. So for us, we have to update the cash book by crediting the cash book with the amount of the standing order. So we're going to add the standing order. So which means we can deduct that it means all addition to the cash book, that is the dividend and credit transfer, will be debited to the cash book, while the rest we serve as deduction to the cash book will be credited. So we are going to have bank charges here. Bank charges. And generally, this is the payment side of the cash book, this is the receipt side of the cash book. If we have a receipt overcast, it means the balance of the receipts here is having an overcasting figure. So we have to reduce that. And how can we reduce that? It's for us to credit the amount of overcasting figure of the receipt side. So by crediting the cash book, so receipt overcast will be here. So the receipt side is the debit side. Once the receipt side is overcast, we have to credit the amount of the overcasting figure in the cash book. So we have to do that. So when we have payment overcast, this is the payment side of the cash book. So when the payment is overcast, what will happen? We will have to debit that to reduce the overcasting figure. So we have payment overcast. And also, if receipt is undercast, what are we going to do? We have to debit that also. That means the undercasting figure, we have to increase the amount of received by the undercasting figure. So what will happen? The adjusted cash book is going to be debited with the receipts undercast. So we have receipts undercast. While also payment undercast will come here. So we can then balance the adjusted cash book. So we have this. So I can add this. So we have this. So we can have balance brought down as this. So after preparing the adjusted cash book, the next step is for us to prepare the bank reconciliation statement. So we can have the bank reconciliation statement. Bank reconciliation statement. So what I'm going to have, do not forget we are having the unpresented check we have not used. But also we are having uncredited check. So the first thing we are going to have, the first thing here for us to have, what we are going to have is balance. Okay, balance as per adjusted cash book. So the balance of the adjusted cash book. So we are going to have that, which is this. So we are going to add unpresented check generally. We are going to add unpresented check. So to it. So we are going to less uncredited check. So which is this? And that give us this. So we have an illustration of bank on an adjusted cash book. So this is the illustration. On 31st December 1998, Ojoge and Co.'s cash book showed the balance of cash at bank 700, but this was not equal to the bank statement as at the date, same date. So on investigation, the following items were discovered to have caused the disagreement. So we have A from F to F rather. So and we are asked to. So we have an illustration on the adjusted cash book. So this question, on 31st December 1999, Ojoge and Co.'s cash book showed the balance of cash at bank 700, but this was not equal to the bank statement. It was at the same date. So on investigation, the following items were discovered to have caused the discrepancy. So we have a check received for 2,000 naira entered in the cash book was not entered by the bank until January 1999. This has been entered in the cash book, but it has not been entered in the bank statement until January 1999. This is uncredited check. You can write that here. So the check issued amounted to 4,000 naira had not been presented for payment. Unpresented check, a standing order, explain itself, a dividend, explain bank charges. So a customer paid into the bank as credit transfer, as explain itself, and we are asked to prepare the adjusted cash book and bank reconciliation statement. So the first thing, adjusted cash book. Credit and you have debit. So the balance of the cash book at that date is 700 naira given to us. Okay, so balance brought down. Amount in the bank statement. So a check received for 2,000 naira entered in the cash book, which is the uncredited check, should not appear in the what? In the adjusted cash book, because such an items has been already what? Reflected in the cash book. Such as should not be recorded again in the cash book. So should not be recorded. So we also have check issued amounted to 4,000 naira had not been presented for payment as unpresented check. So should not be reflected in the adjusted cash book. So the next thing we have a standing order with the bank for 200 naira for a subscription 200 naira to a school was not recorded. So we have standing order that should be on the credit side. Standing order. We have 200. So the next thing we have a dividend of 150 naira has been received by the bank but it was not entered in the cash book. So we have to update the cash book with the amount of dividend. So we have dividend 150. So the next thing we have a bank charges 500 naira was not recorded in the cash book. So we have the bank charges. 500 naira. So the next thing we have a customer paid more than 15 naira into the bank account as credit transfer. It has not been recorded in the cash book. So we have the credit transfer. So we now have anything as regards to overcast and undercast. So the next thing is for us to balance the account. So we have to add everything on the debit side. We have 700 plus 150 plus 15. Then that give us 865. Total on the debit side and total on the credit side that give us 700. The differences should be 165. So we have balance carried down 165, and you can then have the balance total to 865 and 865, and you can have our balance brought down. So you have 165. So we've done with A part. We can move to the B part, which is the bank reconciliation statement. Bank reconciliation statement. Reconciliation. So we have balance as per adjusted cash book. So we have 165. So we have to add unpresented check. Which is 4,000. That gave us 4,165. So and we have to deduct uncredited check. And that gives us 2,000 naira. So we have 2,165 as the balance per bank statement. So in this topic, or in this class, we did the derivation of the bank statement, the derivation of the bank reconciliation statement, while also we talk about the preparation of the bank statement, and also we talk about the reasons for the disagreement between the bank statement and the cash book, like the unpresented check, uncredited check, dividends, and the likes. Okay, we also talk about the preparation of the adjusted cash book. So if you are having any confusion about this topic, do not hesitate to replay the video, and again some exercises will be displayed on your screen. Do well to attempt such a question. Thank you.